All right, everything looking good. And we are live. Let's go ahead and get this stream rolling. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on Wednesday, 6/8/2022. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and, of course, trade responsibly. What's going on, Calma Betty? Good to see you. Bitcoin to 10K. CW says that is a scary joker. Yeah, you're kidding me, man. The scariest joker right there. Somebody just let me know that everything's coming through. Appreciate it. Arturo beat me to the punch, man. Thank you. All right, let's go ahead and take a look at what we got going on here. Got some of the moves that we were anticipating. Built a case for quite a few bullish and some bearish signs as well in various markets. Crypto did something pretty important over the last couple days. So we'll get there. Maybe we'll do crypto second. We'll start with TNX though. TNX looking bullish. We got the hard buy signal coming out of the bearish control zone. Now these Stochs are powerfully angled to the upside. Bunch of green histograms. We do have a red slope line on the TJD TDMACD. So don't want to get too excited, as technically, this portion of the uptrend has come to a completion. It is always possible for it to resume the uptrend. Also, we could have a deeper retrace. We could also, resume the uptrend, put in bearish divergence, and then have a deeper retrace. But the fact of the matter is, as long as this stays blue, that is the trend. It's not always going to pick the absolute bottom of the trend. It's not always going to pick the absolute top of the trend. But the idea is for the TJD TDMACD, as opposed to just your typical MACD, to essentially allow you to capture a large portion of the trend and not get, tricked or knocked out of your position on some quick little pullback and miss out on remainder of the upside. So that being said, what we see here on the daily is still strong to the upside, but cautious, as oftentimes, we'll get a deeper retrace. But again, when we get a sell signal, or, this flips red, essentially the bearish version of the momentum, when it flips red, but we're still in a bull trend, obviously we don't take that as nearly as important of a signal as if it was with the trend, as if it was flipping blue in a bull trend. So obviously counter trend moves are less likely to play out, especially if we see just one indicator oscillator telling us essentially that's the case. So TNX looks like it is likely headed up here higher. The longer it hangs out at or above 3%, the higher it's going to end up going. So still very bullish in my opinion. So TLT, obviously everybody wants to come in on these bonds and take advantage of, the move down that we've had in them. But I'm just not convinced that it is all over yet at this point in time. We're still just consolidating below key support. So we lost the descending white channel, we lost the ascending blue channel, and we hit key levels, and we're consolidating at the lows. So in my opinion, this looks like this could get ready to go lower. We don't want to get too bearish on it now, just like we don't want to get too bullish on the yields right now. But the truth is, I don't see any signs of a reversal, at least at the moment. So again, still looking tough. And as long as the DXY and TNX are still looking strong, it's going to be very difficult for equity markets to go to the upside. So US oil, again, very strong. We broke out above the channel, consolidated at it, maintained support, and started moving back to the upside. Obviously, the next target is our recent cycle high. And then after that, it's all-time highs. So, there's no surprise here. This is still just doing what it's been doing. And it looks like it's just going to keep on doing that. Going into the summer, I don't see prices going down anytime soon. We don't see any fundamental changes taking place in the space. So, call it what you want to call it. Rampant speculation or actual supply demand dynamics. Fact of the matter is, there's nothing stopping oil from going higher. Energy in general. Doesn't mean they can't have pullbacks, but overall, the momentum is with them. The trend is to the upside. They're bullish. So Dow Jones next. So again, we've just seen more days of nothing. So we basically had about a week of upward price action, and then we've had a little over a week now of just sideways price action. Again, nothing has happened. Meanwhile, the indicators and oscillators continue to trend to the upside. So we know what that means. I mean, we're basically have come all the way from the bearish control zone all the way up to the bullish control zone. Last time we were in the bullish control zone, the price was at 35,400. Now we're in the bullish control zone. We're at 32,900. So what is the price going to look like when we go back down eventually, whenever that should happen, and we end up in the bearish control zone again? Probably the price is going to be much lower. So we're seeing essentially the key principles of a downtrend or a bear market take place here, as we're essentially just seeing consistent high, low, lower high, lower low, lower high, lower low, and then we would assume once again lower high, and then eventually a lower low. So still looks very, very bearish. Looks to me like the beginning of a bear market. Obviously, everybody else is now saying, oh, things are down 20%, so it's a bear market. It's not a bear market. We were talking about essentially the importance of being able to identify the bear market when we were down like 6%, and then how everybody else was going to be talking about the bear market but by then we'd be down 20, 25%. Well, here we are down 20, 25%. Everyone else talking about the bear market. And, we've been able to dodge all the damage to the downside and capitalize on the, moves to the upside. So, we sort of have double dipped in this market. So that being said, Dow Jones, nothing really has bullishly changed here. We're essentially at what was support. It's acting as resistance. We've moved to the upside. We're consolidating at this level. Does it look like we're going to consolidate and go higher? It's possible. I think it looks more likely at this point in time that we're just going to have a pathetic little peak, and this is just going to start rolling back over and going down like it did the last time and the time before that when we got the cross to the upside. It does not look good to me. These markets still do not look good. Obviously, not much has changed. We have essentially, for the last week, just been watching one candle up, one or two down, one up, one or two down, one up, one or two down. So nothing has changed. So now I'm not going to all of a sudden be bullish or bearish. If anything, we're literally seeing in real time the bearish reset play out. The indicators and oscillators are using a bunch of energy going to the upside, while price action barely moves to the upside or goes sideways. So by the time the bears do take over again, by the time they're back in control, we just expect extreme pressure. As the biggest move the bulls can have is to basically move up slightly and go sideways. So once the bulls lose control again and the bears are back in control, should have no trouble putting some serious pressure on these markets. So SPY looks basically the same as the Dow Jones. Still inside the bullish control zone, all green histograms, 821 across to the upside. We should be seeing explosive moves to the upside, but we're not seeing that. We're at resistance, and instead we're essentially just seeing all of our energy get exhausted while price action goes nowhere. IXIC NASDAQ Composite, very weak. Again, we see the 821 has crossed the upside. We didn't even come back up to resistance. So completely underperformed to the upside, which makes sense because obviously this is very clearly in a downtrend, very clearly in a bear market, and very clearly, we expect continuation. Russell, again, looking pretty pathetic, underperforming move at resistance. Again, same signature on all of these. Everything looks essentially the same, not only as what it looked last time, but just as those general classifications where we said things that look really good and are in a bull market, very few of those. Things that look like they're transitioning into a bear market, and things that have already confirmed into a bear market, and then just various levels of, bad and worse. XLE Energy still very strong. So we took out 90 after that. Our target was 100. I do expect us to get there. We're definitely running out of room to the upside here on this. The stochastics are, well, we're coming back down a little bit. They're not that elevated. We're at about 88 right now. But I do expect this to continue just floating to the upside. XTN Transportation came back up, got the retest of 236. Looks like it's getting rejected. Still have the target of 68 to the downside. Obviously, still very bearish, underperforming. Most of these bullish moves or dead cat bounces or whatever you want to call them, bull rallies in a bear market, they're all underperforming and looking just absolutely horrendous. You would honestly expect, and again, I'm obviously not bullish on these markets. I'm in tune with the markets and see what they're saying. But you would expect with a bull cross and some kind of consolidation that we would see some sort of upward momentum, and it's just not the case. XLF looking very, very weak. Came back up to resistance, back above the 236, but not really going anywhere, and closing back below the 821. Looks like it's ready to just roll right back over and go down again. And it, didn't even make it up near the 200 exponential or simple. So very, very weak. So XLV healthcare. So again, we have, essentially a neckline down here, a potential right shoulder up here. We're underperforming. We're running into 200 exponential and simple. So, if we can't get above those, and we've used up all our energy, and now we've crossed back down and got the hard sell, the, histogram is rolling back over, back below the zero line. It basically looks like this has already run out of steam, and it's ready to go back down and test the lows. So I fully expect XLV healthcare back at like 126 very, very soon to retest the lows. And, it's really going to look like some sort of topping pattern, even if it doesn't develop into like more of a traditional head and shoulders or like two-headed head and shoulders. Just coming back down and retesting the neckline. If that breaks, we would just expect it to start hitting these key Fibonacci levels, the 236 being 122. So if we break below 126, we're probably going to visit 122. XLU utilities, again, looking pretty toppy right here at the heart line. This is a pretty clear resistance. It is towards the top of the range. It's also, rolling over. So it looks like it actually wants to come back down and retest these levels once again. So the most important thing, in my opinion, right now is to come down here and put in a higher low. We do not want to see this come back down and take out the close back here at like 70. Don't want to see that happen. Wouldn't be surprised to see it touch, 70, the 200 exponential, 200 simple, but we don't want to see it put in a lower low right here, because we still have a high right here. Then we have a low. Now we have a lower high. So we don't want to see a lower low and this start to look like it's trending downwards. As we see, obviously, our momentum is rolling over. So if we do get this hard sell right here, it's going to look like a viable signal. And the last time we got a few percent move back down. Not unrealistic to think we could end up down here at like 66 or something like that if we start to see these markets under pressure. XLP consumer staples. Again, has a lot of momentum back to the upside. Had a nice little move back up after like the little capitulation from like the Walmart Target situation. Came back up, got back about 50% of those losses, but then, ran into 200 exponential and simple, really a cluster of moving averages, and was unable to get back above those. So in all reality, it looks like it wants to come back down to like 71 and retest that area. If that holds, then we can talk about building support and possibly going to the upside. But we did recently take out that low. So if we come back down here and, start to threaten the low, again, we're going to have a situation where we have a high, a low, a lower high, potentially a lower low. And then we got to start looking at like 68. And keep in mind, these sectors still don't look great, but they're some of the better looking sectors. So if some of the safety sectors like utilities, like consumer staples, potentially real estate start to struggle, there's not going to be a lot of other places to hide. I mean, at that point in time, it basically leaves like energy. So XLRE real estate. So we saw that push back up after essentially like the breakdown of the neckline. Came back up, ran into resistance, and now we're closing back below the 8 and 21. We saw the initial move play out. Still have targets to the downside a little lower at like 39.25. We'll see if it gets there. It looks like it wants to come back down and revisit the lows. Again, we're seeing the momentum rolling over on most of these things. So it's looking pretty evident that, essentially the moves have played out and, pretty clear that we're looking at lower highs across the board. So DXY, again, looking a lot like TNX, slightly less bullish, but we see the hard buy signal coming out of the bearish control zone. We see it in an uptrend. So again, that looks like a buying opportunity, as where a, sell signal coming out of the bullish control zone in an uptrend is much less reliable. We don't want to take these as, oh, we need to get out of this because we missed potential opportunity as we get a hard sell and then don't even come close to the bearish control zone. Situation like this, we came all the way back down to the bearish control zone, consolidated down there for a bit. Last time we did something even remotely similar, or, got the exact same signature was, literally a year ago in 2021, as we were basically crossing into, this bull trend. So now we're in a bull trend. We want to respect the bull trend. So we look at the bearish opportunities as opportunities to buy before continuation to the upside. And in this case, DXY looks like it's getting ready to cross the 821 back to the upside. And the moment that that happens, once these cross back to the upside, we're just going to come back up here and threaten the highs. And then again, we've talked about it quite a bit. But when we zoom out and we really look at this monthly chart, what really happened, we took out the high right here. And, essentially we took out this high right here and shot up, threatened the previous high from 2017. And as soon as we broke above it, we came back down, retested, and we're consolidating above resistance. So we broke through resistance, and now we're consolidating at that resistance. On a monthly chart, we know typically what happens after that is continuation to the upside. So still very, very bullish. Just transitioning on the DXY into a monthly bull trend. We know that could last for literally years, and most likely will. So Tesla next, TSLA. So it looks like that inverted head and shoulders. This was a pretty bullish candle and then actually got rejected here. So we have to watch it. This doesn't, just fall out of bed and come back down to the lows. Obviously, then we're not interested in this trade anymore. But for now, still looks like an inverted head and shoulders. Still has a target back up to retest our purple resistance, about 900, somewhere in between the 200 exponential and simple, somewhere around the measure move potential breakout. We're really not going to know until we get above 772 if we're going higher. I honestly think Tesla probably does perform, but there's also a lot going on right now. I mean, this has been bullish and, very, considering the way the markets have been acting over the last year or so, Tesla has held up very well and has been one of the more bullish catalysts, especially when we get some other bullish catalysts. And then Tesla tends to at least perform, sometimes overperform, very rarely underperform. So I think this one has the most likelihood of a bullish move if we do see some continuation. But it is looking pretty weak right now. Definitely not loving how pretty much any of technology is looking right now. But the big names that held up for a long time are starting to really show some weakness now, Tesla being one of them. ARKK. So I'm watching this here because actually the 821 look ready to cross back to the upside. Obviously, if we see more pressure on the markets, if we see tech roll back over, this probably fails. It actually looks like it's about to get rejected and roll back over. Probably either gets a brief green cross for a day or two and then rejection and continues to the downside or something similar. Maybe doesn't even cross to the upside at all. Looks very weak. It is building up a little bit of momentum, trying to at least. But the stochastics already look like they're hitting the bullish control zone and getting rejected. So if this rolls back over now, it's probably just going to threaten the lows again. And, let's be real. There's no, sudden bullish catalyst in ARK all of a sudden. Everything in there was extremely overvalued, and now it is much more close to fair value. But the real question is it still overvalued or is it undervalued now? I would say it's probably still overvalued considering. So once we get to undervalued, then maybe we'll be interested. NVIDIA, sort of our proxy for semiconductors. Again, bearish, obviously in a bear market now. Once we lost the 200 exponential and simple, they crossed the downside very clearly in a bear market. Lost key support, high, low, lower high, lower low. Trying to push back up here for another lower high. 821 crossed the upside, made it in the bullish control zone. But again, just looking like it's rolling over right now. Doesn't even look like it's going to make it up here at 200 exponential and simple. So we're seeing extreme weakness from a lot of these overperformers. And it really does look like a bearish reset is taking place market wide. Apple, slightly less bullish as it did not cross 821 back to the upside yet. But again, we're seeing a lot of momentum spent. We're seeing, all the way back up towards the bullish control zone. We've moved almost nowhere back to the upside. We're running into resistances. We couldn't even get up to the 200 exponential and simple. It should have been, what should have happened in a, I don't even want to say a bullish market, but just in a market where there's still hope. Typically what happens is you'll basically break down from the 200 exponential and simple, and then you'll come back up. The 8 and 21 will get ready to cross. You'll start building momentum, and then all of a sudden you'll just pop up and tag the 200 exponential and simple. And then after that, you can maybe start seeing some weakness, maybe rolls over, gets rejected. But for what's happening right now, it's like the whole market is looking at this and saying, yeah, I don't believe it. Sure, we're building up momentum. Sure, we got a bunch of green histograms. Sure, the Stokes are angled to the upside. Sure, we might cross 821 back. Sure, we might retest the 200 exponential and simple. Sure, we're already down off the highs a certain %. But the market still doesn't believe it. And if the market doesn't believe it, and there's lots of stupid people in the markets, obviously we're not going to believe it. So remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So Google, same thing. Charts all look very similar. The ones we've looked at recently, at least, all the way back inside the bullish control zone. Bunch of green histograms. Barely went anywhere. 8 and 21 have crossed back to upside. Right now, this thing should be booming. We should already be back up here at 25, 23, retesting the 200 exponential and simple, retesting support, and we're not because the market doesn't believe it, because it's weak. Amazon obviously fell out of bed. We had our 20-to-1 stock split. So now it went from our, $2,000 price target was $100 Amazon. It's up about 20% since then. We talked about the potential to come back up here and fill this gap. We talked about a nice pushback to the upside, coming off of essentially this event. And, how basically we still have the same pie. It's just cut into more pieces now. But how that can have not only, a psychological effect on the markets, but can lead to legitimate gains. Now, what has happened, though? Are we going to see those gains? Did we already put in a little double bottom W and then hit the measure move to the upside and now it's ready to roll back over? It sort of looks like it to me. I mean, it looks like all these markets are just rolling back over to the downside. And, whenever they've rolled over at key resistances, which Amazon arguably didn't even get up to resistance. I mean, it should have pushed back up realistically like 137. So, again, looking very, very weak. Very weak. Same thing on Microsoft, looks almost exactly the same. 821 cross back to the upside, has not been able to get that push at resistance. Yeah, I mean, these markets all look just the same and very weak. Walmart looking very weak here. Had that capitulation move, had a little dead cat bounce and then rejection. Looks like it wants to come back down here and sweep the lows, revisit those potential lows. All green histograms, price action bounced a decent amount, but where are we at? Right back where we started. So, I mean, it's a pretty decent support right here. How long is Walmart going to hold out? We really got to see. We got to see something develop. And right now, there's no actual developments. The indicators and oscillators are telling us one thing. Price action is telling us another. One of them is lying. So either price action is going to shoot up to the upside and, indicator oscillators are like, see, told you so. Or indicator oscillators are going to roll back over to the downside. And then price action will keep going down. So are the indicators. And, obviously the indicators were lying. So it's just a matter of which one of them is wrong right now. Because they're not lining up. And, momentum obviously to the downside. So Target, again, looking pretty much the same. Came back down, revisited the lows. Technically, like, gapped down and opened at a new low. But then moved back up from there. Starting to build up the momentum, hard buy, coming out of the bearish control zone. But again, not really going anywhere. And this is just not what... Typically, if we're going to see a bullish move in the market, it's not going to give you this much time to try to buy the dip. So we were literally trading at 212. And then we went to 150. And then the market, everybody got together and they all voted. And they were like, hey, is the correct price 156? Or is the correct price 210? And the market is voting every single day, and it's voting that the price is 156. So as long as the market's voting 156, I don't see anything on this chart that tells me suddenly, all of a sudden, this is worth 200 again. So, the only thing that tells me that Target is undervalued right now is a 200-day moving average. And the only reason it's undervalued is because we're comparing it to the last 200 days when it was a parabolic uptrend. So sure, we're undervalued compared to the 200 exponential and simple moving averages, but who knows how long we were overvalued in long-term time frame, compared to the overvalued in short-term time frame. So we'll have to really see. Obviously the market thought Target was worth a lot more, and then it got new information, and then it changed its mind. So now here we are on the weekly time frame, and we're essentially, oscillating between the 200 exponential and 200 simple, telling us that on a weekly time frame, we have been overvalued in Target stock since January of 2019. So literally for over 2 years, Target stock was extremely overvalued, close to fair valued right here, extremely overvalued through here on a weekly time frame. And now it's only just fair value. So after being overvalued for that amount of time, should it now suddenly just be fair value and then go back to the upside and keep going up? Or does it overshoot to the downside and then actually end up undervalued as people lose faith in this? And then it looks like a good buying opportunity. So that's what we're really looking for. It's all about perspective. because on the daily, it looks like, oh, we're undervalued. On the weekly, it's like, oh, we're fair valued. And then we go out to the monthly, it's like, oh, wow, this could actually get pretty nasty. We might come back down to $91. We might see the lows from, Rona revisited. And it wouldn't surprise me at all if we revisited those lows. Most markets right now, most charts right now, if Target was trading in line with the majority of other stocks we're seeing, most of those stocks are, or indexes even, are very close to or have already retested the pre-pandemic highs. So right before the Rona, and we saw the dump come in, those highs right here were, essentially like, end of 2019, early 2020. And, we're still a little ways off that. So if we come down to 130, 128 realistically, that was the pre-pandemic fair value. If we come all the way down to 200 exponential and simple on the monthly, we're talking about, low 80s to low 90s. And we see how many times over, history, we've come back down and actually, returned to close to or at fair value. So we'll have to see what happens. I mean, momentum to the downside, 821 getting ready to cross the downside. Each time we saw that take place, that cross the downside, well, I shouldn't say each time, but majority of the times or many times on many stocks, not as many on target. But when we get the 821 cross the downside, there's a high probability of a retest of a 200 exponential and simple on the monthly. We see it again take place right here. Here we get a false alarm. Here we get a couple false alarms. So it doesn't have to happen every time. But we know that, a prerequisite for a nasty, nasty dump to the 200 exponential and simple is the 8 and 21 crossing. So, but I'm only just seeing the market begin to really price in some of these scenarios. And the truth is, the market, in my opinion, is pricing in like bad scenarios in the most bullish way possible. It's like, oh, yeah, sure, the Fed's going to raise 50 basis points. Oh, yeah, sure. The Fed's going to let, mortgage-backed securities and treasuries run off their balance sheet. Sure. We're going into quantitative tightening, but the Feds can only do it for so long and then they have to pivot. They have to pivot. The debt is unserviceable. The Fed has to pivot. They can't raise it. They have to pivot. That's all I hear, nonstop, all over and over again. They have to pivot. The debt's unserviceable. They can't afford it. I mean, if the government can't service their debt in the United States, they'll just print money and pay for it, right? I mean, it's a little more complicated than that, but we're never going to come to a point, as long as the United States is world reserve currency, where we can't service our debt. We're never going to default. We might default through devaluation by printing money, so it's like an indirect default versus being like a direct default where we're like, hey, we can't pay our debt. But either way, essentially what? Same effect. You know what I mean? Same thing. It's just which way we default. It's sort of like bearish divergence versus hidden bearish divergence. Sure, one's on the indicator, one's on price action, but, the end game is still the same. It's still bearish divergence. So the gold chart still oscillating between the 200 exponential and simple. Still doesn't look good to me. Indicator oscillator ran all the way back up. It moved almost nowhere. And now it looks like it's ready for a capitulation move to the downside. Silver XAG broke down from key support, came back up, retesting that support as resistance. We are still technically outside of the key areas. So we have lost support and we're basically just retesting as resistance. And again, it looks like the stochastics are ready to roll back over and go to the downside. And we know what that looks like, probably another new low. So when we really, really zoom out on this and look at it, we essentially have a high in August of 2020. Then we have, a series of lows. Then we have a lower high, series of lower highs. Then again, series of lower lows. Then again, series of lower highs. Then again, series of lower lows. So there's no way to argue that silver is doing anything, but looking bearish right now. A series of lower highs and lower lows with a negative slope on the 200 exponential and simple and price action below the slope. That's literally all the criteria we need for, a bear trend or a bear market. So there's nothing good about silver right now. It does not look good. Gold silver ratio, very strong, obviously consolidating above 200 exponential and simple. If this thing just decides that, we're bullish now. I would not be surprised to see a massive candle, this take off. You guys know my target's not even that far ahead of where we're at now. We almost hit it with that push up right there. I mean, I was literally expecting us to hit like 90 to, 98, somewhere around there. And I was real happy with, 90 as my target. As we basically picked out the bottom right here based on that bullish divergence that was taking place. So we literally nailed this perfectly, nailed our target perfectly. But the truth is, this is starting to pick up momentum and looks like it really wants to go, on a run. So what does that mean for commodities? Because I would assume that, if the commodity market's strong, that industrial silver would appreciate. So if gold is going to gain value compared to silver, either silver is going to crash or gold is going to go parabolic. So, I mean, that's just the way I look at it. So the real question is, it's like, are we going to see weakness in industrial commodities? Are we going to see strength in, monetary, gold essentially? I mean, either one is fine. Either one of those is perfectly okay. We could see both of them. Maybe people get scared, and then also we go into like, a, kind of weird, like disinflationary, stagflation kind of environment. But people also don't trust government and money, so they run to gold. But also like, worldwide recession takes place. So we don't see the same strength in manufacturing and industrialization. We'll have to see. I mean, but that seems like a viable, scenario to me. So pot stocks, ACB, still not quite to our target yet. Target is 140. I told you I'd put in a buy last week for some ACB. I'm starting to just build a position at this point in time. Just because I am confident in this space. And these things are just beat down. Especially this one because it did put in a new low. That capitulation dump is key, I think, for like a potential like short to medium term bottom. Something like this in Tilray, just a big capitulation move. I would love to see something like that come from Tilray, especially if it puts in a new low. That would actually make me very bullish on it. But below $4, looking for like that 250 range on Tilray. But again, these things have been getting beat down for years, and most of them are down like 90+% from their highs. So at this point in time, I mean, I think a lot of these buys are going to look like, you can look like a freaking genius a couple of years from now. If the marijuana industry at all does well, if it grows even a little bit and you pick even remotely the correct players in that industry, these stocks should do well. And the ones that don't survive probably just got bought out by somebody else. So probably still do well. Hexo got down almost to like that 22-cent mark. Again, that's, one of our targets at downside, not like some like cement target in the sand. But again, very undervalued. We've talked about Hexo and ACB and, how these have really, really overshot to the downside. And there is some serious potential, in my opinion, for some upside when the time is right, which could be a while. CCJ had a nice little push to the upside, a burst to the upside, I should say. We'll have to see now, though, if it starts looking tired. Again, this one looking much more bullish than the rest of uranium stocks. URA, the burst was really just the retest of a 200 exponential and simple. UEC looks much more like Cameco. And then UROY, again, that burst up was the retest of a 200 exponential and simple. So this trade setup is all finished up now. A nice little 30% move to the upside. Obviously, nice when we see that take place. We did come up exactly to the 382 and the 200 exponential as expected. Sort of front ran or like undershot the 0.5. But again, the way this has been looking weak compared to the rest of the uranium space, the overall posture of this, it's not a surprise by any means, that it would essentially underperform. So I wouldn't even be surprised if we don't get to that $4 target. Obviously, it's great if we do. It lines up with a lot of resistances. The 0.5, the 200 simple, the top of the channel. But it's possible that we actually don't even get up there. There was quite a bit of selling into this candle and, essentially looks like a rejection at this point in time. So that may be it. Obviously, I wasn't the only one looking to take profits at that level. So here's an interesting one. So Altria, we've been talking about this quite a bit lately. And I was talking about how, long term, this is really setting up for a long bullish uptrend. And, there was just one more thing I wanted to see before I bought it. And, Obviously we saw a, pretty thick and juicy candle today, 8.37% to the downside, retest with 200 exponential and simple. But where did that take us to? Oh, look, took us exactly to our target. So that was the move that we've been waiting for. The retest of a key Fibonacci, 200 exponential and simple. We thought it was going to take a little longer to play out. Expected sort of like a chop down to that area, essentially running into our support here in blue, for this ascending wedge. But, we got there quick. And, that's a good thing. So if we zoom out here and take a look a little longer of a time frame, what did we do here? That was the big move we were talking about. The retest of a 200 exponential, potentially simple, as now we're essentially flipping back bullish. This was 2018. We confirmed bearish and then capitulated. And now here we have confirmed back above the 200 exponential. Came back down for the retest. 200 simple is very close to flat, which means that if we just stay above, essentially like that $50 mark, 200 simple flips blue. And then this re-enters into a bull market. So we saw this essentially, we look at this move right here, entering into a bear market, that move entering back into a bull market, and then this is where we want to be long. So again, entering into a bear market, confirming the bear market, and then we want to be out. And then once we come back up here, retest, come back up, retest, and we see a series of a low, and then a high, and then a higher low, and then a higher high, and then a higher low, and then a higher high. So we went from a downtrend into an uptrend, confirming back on top of 200 exponential and simple, retesting what was resistance through here as support, and now potentially want to see a consolidation and then the continuation of that move, and essentially the beginning of our next bull market. And this bull market doesn't have to be the same, but this one was from 2009 until 2018. So, almost a decade bull market. And price action wise, it was from, essentially $20 to $80. So like a 4x over, 9-year period. Doesn't have to be like that in the future, but, probably going to do some decent gains if in fact we do hold. We did see that sell buy sell signal, so we were expecting this retest. Now that we have it, we have to see it hold up as support. So, and then just looking at the monthly, again, we talked about this, how we basically were in a bear market on the monthly, came back down, retested, fair valued at the 200 exponential and simple, and now, we're basically consolidating, trying to move to the upside. What we need to look out for is, does this come up here on top and put in a lower high and then fail and come back down and then actually turns into a bear market? I don't think that's what's going to happen. We'll see some signs if that's what's going to happen, but right now it looks okay. Right now, we would assume, especially on a monthly, that when we retest the 200 exponential and simple, that would be support. So as long as we see the bullish posture continue here, it looks good. Obviously, we have just flipped over momentum on the TJD TDMACD, and obviously, buying off the 200 exponential and simple, hard buy, Stokes angled to the upside, and looking ready to penetrate into the bullish control zone right here. So, definitely some potential for this to keep running. But, obviously, with any retest of support, if that support doesn't hold, we have to respect the market telling us that it didn't hold, and, we're not going to get the continuation that we were hoping for. But that was very cool, obviously, seeing that move play out perfectly, especially that quickly. It doesn't always happen like that. Usually our moves get hit, but not often within a couple days like that. So I'm really looking at this for our opportunity now. But like we've discussed previously, when we're looking at a monthly chart and we're looking at, a monthly bull market resuming, okay, first off, those are exactly where I like to position. If we can catch a monthly time frame chart flipping from a bear market into a bull market and get it anywhere close to the confirmation of the bullish flip, typically we're going to be in those trades for, months is an understatement. Realistically, it's years. So those are legitimate like positions or investments or whatever you want to call it that typically have very low risk and, pay off exponentially in the long run. So that's, the best charts we're looking for. And if we're trading a daily time frame, it's the same thing. If we're, coming out of a daily bear market into a bull market, that's a great time to take a position. But again, the longer the time frame, the longer the position likely lasts for. So if we're getting into something on a monthly, we're expecting to be in that trade for, 4 months, 8 months, a couple years, a decade. Kraft Heinz company. So we talked about this. I almost didn't even look at this one again, But it's very important that we pay attention to this as the chart's developing. We've been talking about this key support here in blue, and how even though we broke down below the support, came back up, retested it, and went down again, that, you know, until we essentially consolidate and start to lose this level, we don't want to get overly bearish at it. So we talked about this potential trade setup to the upside, the risk reward ratio, and, you know, potential for this entry, or if it went lower, to get a lower entry for, again, another trade setup and then a second one, taking us to the initial target. But what we want to see happen right here, if we're going to be bullish on this, we want to see it reclaim this ascending support line in blue, the 200 exponential and 200 simple. So if we can start getting back above 38.50, this starts looking good again. And, you know, we can take the entry at a slightly higher point, but with much more conviction for a nice risk reward trade setup. If we get rejected here and then it starts to go lower, especially if we take out, you know, at this point in time, we don't even need like some big, juicy, crazy stop loss. You know, we are essentially looking at, you know, if we come down here and close below our lowest close right here, that's going to look really bad because we basically lost 200 exponential on simple at support. We lost our ascending support, and then we lost our Fibonacci support. So if we basically close back down below 36 now, we know we don't want to be in that because it's probably going to turn into a bloody waterfall and run all the way down to that next support, which again is where we're looking to take our next trade setup. And then that just gets us back to where we're at right now, but with an extra 25% in our pocket. And then if we just return back to 0.5, we're talking about a 50% move. And then in all reality, you know, if we get our third trade setup to play out from our lower target, you know, we could be talking about an 82% move, which would have been a 42% move from where we're at right now. So we're talking about an extra 40% if we see that move lower. You know, but obviously, to tell you the truth right now, if we want to be bullish on this and, you know, we really like this, we don't want to see this come down to a lower price. We really would like to see this hold right here and then this trade setup to play out. And as soon as we put in a new high over here, you know, we would essentially shoot up to like 53. And then after that, we're basically just stair-stepping back up this internal retracement, you know, from the previous high back in 2017. So very, very crucial point on quite a few stocks right now, telling us, you know, we're at the decision point. You know, stocks are going to let us know very soon. Hey, are we going much higher or much lower? All right, so on to our cryptos. Make sure you guys smash up the likes and subscribe if you have not already. If you find any value in these streams, you know, jump in the comment section, as it really does help out with the, you know, channel interest and the YouTube algorithm. Obviously, YouTube hates me, does not like my profanity or me talking about sensitive topics and, you know, my lack of woke agenda, but that's okay. So Bitcoin futures chart, again, still just chopping around in the same area. Again, we're seeing a bunch of momentum here, all green histograms for literally weeks at this point in time. Stochastics angle to the upside, but got to be real careful here. You know, blue stochastic has already rolled over. We see a pretty aggressive knife stab up here, you know, on that recent move on the futures chart, that recent push up here to resistance that got rejected. And, you know, we tried to close many times back above the 8 and 21 and get this across the upside, and it failed. So the more times we get rejected and come back down, the worse it looks to me. Now, typically, if you consolidate at resistance, that's good because you're kind of chewing through resistance. So somebody could look at this and say, well, you know, we closed at resistance at the 21 moving average, so that's good. But realistically, when we zoom out and look at the macro, we're not really closing at resistance. You know, we're at support. This is a key support level right now. This was support right here. It was support all through here, and it's acting as support right now. And, you know, if we lose this support, there's nothing holding us up from like 20,000. So we're at a key level. If we break through the support, we break through it aggressively to the downside. So, you know, it's really important to kind of zoom out and look at the big picture. This is not a bullish looking chart right now. This is very, very bearish looking right now. You know, if you showed me this chart, didn't tell me what it was, and I saw this, I would say, well, this looks like an atom, you know, a sharp V peak right here. This looks like an Eve, a big round peak, a rounding peak, and that's essentially a double top. And here's the neckline. And when we lose this neckline, we get the measure move from the top to the neckline back down, or look for key support, which would be essentially like 14,000 previous high right here, or, you know, 20,000 previous high right here. That's what this chart looks to me like right now. You know, when we look at the weekly and monthly chart, we have bearish divergence on the weekly, bearish divergence on the monthly. And, you know, again, momentum just aggressively moving to the downside, stochastics diverging to the downside. So picking up momentum to the downside. And again, we were one candle support, one monthly candle away from basically retesting 20K. And then after that, we're basically one candle here and one candle here from 14K. So, doesn't look good. So from 30 to 20 is going to be brutal, but from, 20 to 14 could be just as bad if that's what happens. Maybe worse, because I think at 20K we're okay and people aren't getting like crazy liquidated. If we break below 20K, that's when a lot of people are getting liquidated, because a lot of people just bought the previous all-time high saying, oh, we took out the all-time high, blue sky breakout, Bitcoin goes to the moon. So if it does a 100% round trip back to that 20K level and starts to violate what was resistance, should act as support, and it doesn't do so, it's going to look really bad. It's going to look really bad. So the spot market Bitstamp chart. So we see this one was actually looking slightly more bullish as we close back on top of the 8 and 21, and it looked really close. Yesterday's close, actually, this 2 days ago's close was good because we were back on top of 821. It looked like they were going to cross the upside. Then we got a really aggressive selling action, and it got completely bought back up. So the bears pushed the price down, and the bulls rallied it all the way back up and closed it back on top of 821. Looked like a rejection of lower prices and looked likely for 821 to cross to the upside. And then where were they at the next day? The 24-hour candle that just closed at 8 p.m. back below the 8 and 21. So all the work that the bulls did right here to try to push the price action up, it was just completely invalidated by the next day's bearishness. This looks like redistribution taking place to me right now. We have all green histograms. We have blue slope line. We have all momentum. We have stochastics angled to the upside. And, here we are just doing nothing, going sideways. Big bearish reset. We are refueling our submarine before we, venture lower into the Earth's crust via the ocean in our submarine example. So we see a big spike right here and a big spike right here on the knife. And obviously those both corresponded with the little short-term tops right here. That was our big spike up. Next candle was the top, and then we gave it all back. And then here we saw a big spike up. Technically this one was the top, and then we gave it all back. And the one before that, we talked about this too. Big spike up, that was the top, and then, gave it all back and went much lower. So if you want to look for a leading indicator, you want to look for something that's going to tell you, the future, as opposed to all these lagging indicators. That's the one for you. The knife will very, very reliably identify either a top, a bottom, or divergence for a reversal of a trend. So yeah, not looking good. Not looking good for crypto. Ethereum still looks very weak, consolidating at the lows. It's like pretty much the same thing right now. Bitcoin dominance still strengthening. We're up at our next resistance. You guys know once we take out that resistance here, our next target is 51.15 and then eventually 56%, at which point in time I think we'll see some serious exhaustion. But still very, very strong. Bitcoin is going nowhere right now, and yet it's gaining market cap. So that means that the alts are bleeding out right now. Their throats have been slit. They're going to die. They are just hanging on to that last little lifeblood. So, expect altcoins to, completely die, many of them. But expect big capitulation in altcoins. That's what this chart is telling us. It's telling us Bitcoin is about to take market cap from altcoins. There's only two ways that happens. Bitcoin goes way up compared to altcoins, or altcoins go way down compared to Bitcoin. So you can pick. Is Bitcoin about to go parabolic right now, or are altcoins about to capitulate? I mean, no one knows the answer for sure. But, we can probably, with a like 60-40 percentage, say that it looks more likely at this point in time that crypto is ready to capitulate. And when Bitcoin goes from potentially 30K to 20K, that's a 33% move down. 1/3 of the value destroyed from where we're at right now. So most of those altcoins probably going to lose closer to 50% from where we're at right now. So pick your favorite altcoin, look at your account balance in that altcoin, and then divide it by 2 and see if it still seems like a good idea to be holding it. That's what I'm doing at least. And obviously I made up my mind a long time ago. At the top when everybody else was loading up their bags, they were loading it up with my crypto. And when we're in the bear market and they're tired of holding it, I'll come back and I'll pick it all back up for a fraction of the price, because that's how markets work. So total market cap on the weekly looks very, very, very weak. Back down at 200 exponential. Try to move back to the upside. Every single pushback to the upside has been a rejection. We've literally just been putting in week after week of lower lows. We had the same low. We had the same low right now. And, depending on how this week closes, I would not be surprised to see a new low close on the weekly Bitcoin total market cap, rather, for crypto. Looks very, very weak. Avalanche, very weak. Consolidating at the lows. Looks like it's ready to go much lower. Matic, very, very weak at the 236. Holding on to support for now. But again, it's good to hold support, but you want to bounce support and then get away from it. Like a magnet. You could take two magnets with reverse polarity and you push them towards each other. You can push one all the way to the other. You can even get them to touch. But the second you let go, it's going to repel the other magnet away from it. That's how resistance and support should work if they're going to hold up. If they're not going to hold up, this is what you see. Consolidation at support and then eventually a break. Or, here we hit resistance, we consolidate and then break. So, you want to see a aggressive move away from resistance or support. You don't want to just hang out at it. Solana, again, melting down, back down to the 786. Very, very weak, putting in new lows. Crypto looks really bad. I don't have to tell you guys. XMR, Monero came all the way back to 200 exponential and simple. Looks like it's ready to roll over. So, basically was in a bear trend for a while, retested, put in another lower high, came back down, put in another lower low, another lower high, retested, continuation of the bear trend. Probably continues to just go lower. When we look at this, we have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, we have a lower low. So, lower high here, lower low, seems likely. Doesn't look good for old Monero. So Algo bouncing the 618 pretty nicely, but not doing anything after that. Basically just going sideways. Looks very, very weak. There's so much opportunity for so many of these cryptos and stocks. Just have some nice little pushes to the upside, and buyers just are not stepping in. So it's good. We hit support, and we're not seeing a ton more selling, but we're not seeing any buying either. So if we're still seeing selling, and we're not seeing any buying, eventually the little bit of buying or orders in the books that are holding up as support right now runs out, and we continue getting selling, maybe even get ramped up selling. But if we don't get any buyers coming in, we're definitely not going to be going back to the upside. So XRP, again, very weak, just hanging out at the lows. These things can't even close back above their 8s, let alone 21s, let alone get the cross. At least some of the stock market, the 821 cross back to the upside, and they got some little pathetic little 8 and 10% moves. Crypto is literally just hanging out at the lows. So again, in our example from earlier with I think it was Target, we were talking about how, for instance, with XRP, it was 87 cents and it was fair value then. And then it goes down to 40 cents. And now all of a sudden, buyers aren't stepping in. So is this just the new value now? Is this really what it's worth? And it was just overvalued before? Because if it was 80 cents and now it's 40, and the people that owned it at 80 cents were like, oh, it's definitely still worth 80 cents. The market's just being inefficient right now. They would be buying this up left and right. But nobody's buying it up because it's not underpriced. It's probably still overpriced because it's trash. ADA, at least seeing some kind of a move off of the lows. 821 crossing back to the upside. Trying to push back up here to our target. It was 236. So still looking for 91 cents. That would be a nice rally up to 91 cents. That would be a nice rally. It's picking up momentum. It's at least moving off the lows a little bit. It put in some bullish divergence. It hit the 382. It's crossing 821 back to the upside. It looks like it at least wants to try to push back up to 90 cents. Does it underperform? Does it even go anywhere from here? It probably underperforms, but it looks like it wants to try 91 cents at least. At least try. Don't just lay there. KNC. So it had a nice push back up after that capitulation. It went from new all-time high basically to just a really aggressive sell-off. Lost basically 80% of its value. Went from 567 to $1 in a couple weeks. came all the way back up, 61.8% of the move down, and then it's going lower. So losing this support at the 382 is key. Looks like it wants to come back down to 236. 236 should be a buying opportunity, as essentially we would, at least if we're going to try to be bullish on this, we would assume that after putting in the high and putting in the low, we have a lower high right here. But if we put in a higher low right here, we could start to at least develop, some kind of an ascending support kind of like move back to the upside. And we can at least start doing, something like this is basically like the goal. We sell off aggressively. We have a nice little bounce back to the upside. Then we continue down as we break down from this pattern. That's what we would expect to kind of happen. And then we have a high, we have a low, and then we have a lower high. And then actually this lower high turns out to be part of a bigger move. So we actually have a high, a low, and then a lower high somewhere up in here. And then we break down and eventually put in a lower low and we consolidate. But what we want to see take place, if we want to be bullish on, any of these cryptos, basically, we want to see something like this take place and at least put in some kind of like a short-term uptrend where we're putting in a low, then a high, then a higher low, then a higher high, then a higher low, then a higher high. But in the macro, we still have a high, a low, a lower high, and then eventually we continue the downtrend. So that's what we're paying attention to. That's what we're looking out for. And that's why realistically, that's our entry target that we really want to see. And we talked about some of these lower targets on some of the other charts we've looked at tonight. And it's important, to basically have multiple targets in play, multiple entries in play, and not just immediately like, oh, I didn't pick the exact bottom, so now I'm stopped out of the trade. No, maybe you want to put in your initial entry, then put in a lower entry, and then you want to line up your stop losses. When do you not want to be in this trade at all? But essentially, maybe the first entry gets hit, and then the trade goes bullish in your favor. So you end up with a smaller position, but, very little risk. Maybe it goes lower the first time, and then it hits your second target, and then goes in your favor. So you end up with a lower price position because you've basically averaged down. And then, when the move goes in your favor, the size of the position is bigger because you had 2 entry points hit instead of 1. And then obviously the worst case scenario is, it comes back down, takes out your first entry position, takes out your second entry position, stops you out of the trade, and then goes lower. Which any of those is a possibility. It either goes higher, then it goes lower, or it goes lower, and then who knows, maybe it goes higher. But that's what we're looking at. We're just looking at probability, just keeping it simple, just taking the easy money. Hexo is next on the daily. So, Hex rather. Hex broke down from this descending channel, basically came back down, tried to revisit the lows at the 0.5. Would have rather have seen a little more technical of a push down. But technically the wick already overshot the 0.5. So we really didn't need to come all the way back down. But we do have consistently lower daily closes, losing momentum, and we're below resistance. So I would expect this to come back up to like 67 cents at some point in time as a retest of resistance and then get rejected. Now it's possible it doesn't get rejected. Maybe it comes back into the channel and then we can start looking at potential targets to revisit the heart line or, potentially the top of the channel. But once it breaks down from the channel like this, and obviously, these were if it was able to move back up, consolidate. We talked about potential entries. The fact that it broke down here, we would have to wait. It would have to close back above the descending support right here. And then we could start looking at, basically the same trade setup back to the heart line from where we're at now, or back to the 236 top of the descending channel. But Hex looks really bad. It looks very weak. Very, very weak. Waves. These were some we looked at last session. So we talked about this, how essentially the most important thing was it holds above the 821, and then potentially we could take a entry on that. Obviously not holding right now. So we talked about basically just keeping a tight stop on this because we don't want to run a stop all the way back down to the lows right here. That's way too much. That's way too much. It's like a 50% stop loss or 30% or something like that. No way. We want to have a super tight stop loss if we lose the 821 and start closing lower lows, because we want to just re-enter at a lower price, probably closer to like 590 or, maybe much lower than that. But obviously this momentum has waned. We're back below the 8 and 21, and we obviously do not want to be in a position once we lose that potential momentum. So, you know, maybe it closes back above here again. Maybe we take an entry from slightly lower at like $8 and then see if this trade setup plays out. But right now, it looks like it's basically at the point where if it goes any lower on a daily close, it's basically violating any interest we have in it from this price. If it goes any higher on a daily close, we can potentially save this 821 and see follow through. But one of those two things has to happen. And the best point about when we're at one of these inflection points, sometimes like people get frustrated and they say, oh man, I wish I just knew if it was going to go bullish or bearish. Well, the best place to decide from is an inflection point, like a key support or resistance, a 200 exponential or simple, something like that. And the reason it's so important, and in this case, the 821 cross, the reason it's so important at the inflection point is because we can run a tight stop loss and we know immediately if we're right or wrong. As opposed to if we're not looking at this 821 cross and we're just looking at the low right here and we say, okay, if we go back down and take out this low, we don't want to be in this trade anymore. You know, it's putting a lower low, so we don't want to be in it. Well, if we try to do that from where we're at right now, that's a 48% stop loss. So at that point in time, the trade setup's no longer even useful at all. Because if we have to wait 50%, we have to lose half our money before we decide we don't want to be in this trade anymore. That's terrible. That's horrendous. That's not even a possibility. So we have to pick key levels that the market is going to validate or invalidate our trade setup based on, not because we like it, not because it's favorable to us, but because it's viable as a key area. And that's what 200 exponential and simple are for. That's what the 8 and 21 crosses are for. That's what our Fibonacci levels are for. That's why these are all so important is we're looking for basically, you know, SR flips or stop and reverse points. You know, support and resistance. It was support and now it's flipping to resistance. So we're at a key level, and if we don't maintain above that level, we know we don't want to be long anymore, and vice versa. So it's very, very important we're able to identify these key levels, not only where it matters and why they matter, but how we can use those to our advantage as well. Because it's all, you know, who cares if you know all about the 200 exponential and simple moving averages and you don't know how to use it to your advantage? I mean, who cares? If you can't make money off of it, what are we putting in all the work for? We might as well just throw darts at a, you know, dartboard and pick stocks. So we have VPCI properties next. Somebody asked me to look at this. I can't even remember what was going on at the time. I mean, it couldn't have been that long since we looked at this. What was it, Sunday? So I guess this was today. That was Tuesday. That was Monday. Oh, okay. So we were talking about the potential for it topping out at the 786. We said if it went higher, it's not going to top out because the likelihood of the 886 being a reverse point was very unlikely. So we would probably revisit the highs. So at this point in time, we shot up. We took out the high. You know, we hit key targets. We closed above. Oh, no, we didn't actually close because we gapped up and then we sold back down to the 886. And then we sold back down to the 786. So I would be looking at this right now very carefully as a potential double top. I would not want to be involved in this any longer. I'm pretty sure, man, I can't remember. I think you said you already had a position in this. I really can't remember, honestly. But at this point in time, you know, it looks like it's basically topped, at least for now. Looks very bullish. 200 exponential crossing above 200 simple. It just looks tired on the daily. It has to come back down and, you know, reset, it looks like. It's a pretty aggressive knife stab on that weekly right there. Yeah, I have a feeling we're going to find out this month is going to be the big decider on this one. Because it really does look bullish on most time frames. Having trouble at resistance, which you would expect. I mean, this was the previous high. So, you know, you would expect it to act as resistance. It's really going to be about how this monthly closes. If it closes above this level, it's going to look good. If it closes with another rejection wick, it's going to look like a double top and not be good because it likely will revisit the lows. But overall, still looks good. Still has momentum in its favor. Looking a little tired on the daily. but it's really just getting started because this is technically just confirming into a daily bull market. Now, the only thing I would be skeptical of right here, and this is real abstract randomness, but I've talked about this quite a few times on the channel. A lot of times you're in a strong uptrend, and then the 200 simple will cross above the 200 exponential. And typically what that means is your uptrend is losing strength. And I've talked about this quite a bit. This is a perfect example of it playing out in real time because we don't know what it's going to do next. But after the 200 simple is above the 200 exponential, that's our warning sign. And what does it warn us of? It says we're losing momentum in this trend and it's likely to end soon. But statistically speaking, there's a very high probability when the 200 simple cross above the 200 exponential, we actually come back up one more time and put in a new all-time high or new high on this cycle. So that's sort of just what we saw happen. The 200 simple crossed above the 200 exponential. We came all the way back up. We just put in a new high. The 200 exponential is ready to cross back to the upside, therefore invalidating this signal right here. But it's also happening right after we just put in a new all-time high, which is typically the last thing that happens before, it goes bearish. So this one could go either way, to tell you the truth. Massive, massive volume spike up here as well. So, typically we see really big volume spikes at lows and highs. So when we saw this big volume spike come in right here, that again tells me there's a strong probability this is at least a temporary high. So as much as there is a bullish case made for this chart, I have to say right now I don't like how it looks. Maybe I'm just looking a little too deep into it. The longer it can just kind of go sideways here, the better it looks to me. The last thing we want to see is it break back down below $29. And that's almost like what you need to see for a retest, which is like of the 382. So a retest of the 382, possibly even the 236, and you can still be bullish on this thing. If it starts to violate, back down here, low 26s, excuse me, that's a big no-go. Man, I mean, this one, I would be real careful with this. This is sending some serious mixed signals. So, but hopefully that helped. It was definitely good to see how that developed a little bit. And I always talk about that trend flipping with the 200 simple cross above the 200 exponential and how we put in new all-time highs often, which obviously we saw take place. And here's a perfect example right now. Let's look at our Bitcoin chart and we can see exact example I'm talking about. Right here, the 200 simple cross above the 200 exponential. Okay? And then what happens afterwards? 200 simple above the 200 exponential, new all-time high, slightly. And then what happens? The meltdown takes place. And then right around here, there was potential for the 200 exponential to cross back above the 200 simple, which is essentially what that chart we just looked at, is doing. So realistically, it would be like if we didn't break down right here and it just kind of crossed back to the upside. But again, perfect example in real time. Bitcoin did the same thing, tricked everyone. So many people bought the top right here. So many fools, buying at 60,000, 70,000. Bags are packed. We're going to the moon, spaceship, Mars, whatever. And now look where we're at. Down over 50%. So, I've made my point. So yeah, that was it for today's list. Let me jump over in the chat here. You guys are pretty quiet tonight, I see. Nothing wrong with that. Soaking up the knowledge like a sponge, hopefully. But yeah, that's it. I'm going to try to keep these relatively short, between an hour and a half from now on. It's been working out well. Trying to make these a little more manageable for everybody so you don't have like a big backlog of videos. Especially when we see, basically not a lot has changed in the last week on these markets, as we've basically been seeing a bearish reset take place, or what appears to be a bearish reset. And now as we see TNX and DXY strengthening, it's going to be very difficult for these equity and crypto markets to move to the upside, because the only reason they were able to be aggressive recently was because we saw that weakness or the pullback in DXY and TNX. So if they start going strong back to the upside and, start threatening the recent highs and start confirming essentially the end of a 40-year downtrend in, DXY and TNX, we are likely to see much, much lower prices in equities in the very near future. And, we're at the beginning of a Fed tightening cycle, and they usually last for multiple years. So, we've had, you know, I mean, what, 2 rate hikes, a 25 and a 50 basis point rate hike? And already people are calling for the end of quantitative tightening? Yeah, sure. Okay. And, the more I hear Jerome Powell talk, and you kind of like read it between the lines and everything, I think that they really want to crash the housing market. Maybe not crash it. I think they want to put housing market under some serious pressure to slow down this inflation, get rid of some of this liquidity, and we'll see how it looks. I mean, if all of a sudden everybody's wealth is in their house or their stocks pretty much, and we've already seen a pretty aggressive pullback on stocks. So if we see further weakness in the stocks and cryptos, and we see some stress on the housing market, which we're already seeing clear signs in the housing market, obviously fundamentals and technicals clearly pointing towards, big time danger in the housing market. That being said, how does that change the inflation outlook? If everybody, we're basically talking about the reverse wealth effect. The wealth effect was created by getting people to invest in all of these various assets, houses and stocks, and then increasing the value of those assets to make people feel wealthy, even though they didn't necessarily realize any of those gains. In many cases, they just borrow against it and then just lever up, because that's what we've been doing for the last 40 years. But if all of a sudden everybody's doing what's been doing and been working, and it doesn't work this time, and we essentially have like wealth destruction instead of wealth creation through the quote unquote wealth effect, whether or not they realize these gains or losses, when you start introducing leverage and, changing the perspective a little bit, things are a lot different. And part of the housing market that people are overlooking, housing is not my forte, but I do know quite a bit about it. And I have some very close friends that are real deep into, real estate investing, etc. Multifamily, commercial, everything. And part of what people aren't talking about is adjustable rate mortgages that have essentially like a fixed period, like 5/1s. So you have essentially like, a 5-year period where it's fixed rate and then it readjusts. So those have been taking place all the time. And as they start to come back up now, these houses or properties are going to be refinanced at a higher rate. And then people are like, well, that's fine because they're worth more now, so nobody's going to be underwater. And then you start looking at people that only put like 3% or 5%, super low down payments, and then bought late. So sure, if you only put down 3 or 5%, and then the market went up 20% since then, you're not really at a threat of being underwater on your mortgage. But if you bought at, peak prices and you put minimum down, and then we end up having a 5%, 10%, 20% pullback, you'll be underwater. And I think more people are at threat of that than people realize. And the biggest factor that no one is talking about, no one is discussing, is we literally saw a record amount of cash out refis. So sure, there's a lot of people that have equity in their houses. Maybe they've owned their house for 2 years or 5 years or 10 years or 30 years. And maybe they got a cash out refi at 2.5% or, super low rate. But now they don't have that same equity in their house anymore. So if you bought a house that's worth $1 million now and you had $100,000 in equity in it, and then you took out a bunch of equity and then invested that in stocks or another property or crypto or whatever, sure, you might still have some of that equity somewhere else, but it's no longer in your house. Your loan is for whatever you refied at it, $1 million or whatever. So maybe you only paid $250,000 for your house, but it was half paid off before, and now you took out that money, you spent it on other things that have no doubt dropped in value substantially. So essentially, sure, your house is worth more money, but you just lost a bunch of money, through your refi. Essentially, quote unquote, lost. I mean, maybe you made great investments with it, But I think there's a lot of people that basically pull the Michael Saylor in either the stock market or crypto, where they essentially had a nice balance sheet. They got a low, rate loan, and basically did like a cash out refi, took a bunch of equity out of their business or their home or, whatever, their stocks, and then just use that equity to lever up and take out, to basically buy more stuff. So now you're levered to the downside. So if we do see the housing market come under stress, it could cause a lot of forced selling in crypto. It could cause, there could be some serious issues. So, I think there's a lot of underlying problems right now that are being ignored. And then later on, people are going to be like, oh, well, we saw a record amount of people taking cash out refis. So of course now all of a sudden, somebody that just took a cash out refi and took all their equity back out of their house is essentially the equivalence of somebody that put no money down and bought a house. The only difference being that their entry point into that house was much lower. So they might not have literally lost a bunch of value. If you buy a house for $100,000 and then it goes down to $50,000, you feel like you lost $50,000. If you bought a house at $100,000 and then it goes up to, $1 million and then it goes back down to $500,000, well, sure, from your entry point at $100,000, you're still up 5x. So that's not bad, right? But if you did a cash out refi when the house was worth $1 million, took a bunch of equity out of it, and then all of a sudden the house's value goes down, and then you still owe a bunch of money because you cash out refied on it, you're in the same place as that person that just bought with no money down right before a downturn. So I think a lot of people are ignoring, the different things that are taking place right now. And as we're essentially confirming that Europe, China, and United States are all in or going into or very close to or, close enough to recessions, hard to believe that we can just look into the future and say, oh, things are going to be fine, things are going to be strong, Fed's going to pivot, everything will be gravy, So that's it. That's my little wrap up for today. I just think it's really, really important that we pay close attention to these markets. And, most important chart, in my opinion, right now, or two charts, are TNX and DXY. You should be looking at those things literally every single day and seeing what's taking place, because those are going to determine the overall direction of the rest of these markets. And as we continue to see, we're coming up on the end of Q2, our next earnings period, lot of key factors taking place, as now we're going to start to see how these numbers are really translating into what's really happening now into 2022. As essentially the last numbers we got were basically still strong towards the end of 2021. We still saw the stock market basically at highs. Crypto is still looking pretty juicy towards the end of the year there. Everything was looking fine. And those are the numbers we got so far. So now we see the economy has actually turned. We see the markets have actually turned. And now we're going to see that reflected for the first time because of the lag in earnings, and guidance and everything. So I think going into the near future, in the next couple of months, we're going to start seeing the big cracks start to show up in these markets. And, all of a sudden, a lot of these like conspiracy theorists type people calling for like big crashes or whatever, are going to start looking, a little more intelligent than they are. But that's it. Going to go ahead and wrap it up there. Don't want to go too long. Appreciate each and everybody tuning in today. It is Wednesday at 9:20 p.m. Eastern Standard Time. Remember, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Make sure to like, subscribe, share it with your friends. Protect your principal, preserve your capital, and lock in those gains. It is 6/8/2022 on Wednesday, 9:20 p.m. Eastern Standard Time. Make sure you check us out for our stream on Friday, 11 a.m. Eastern Standard Time, till probably about 12 or 1 for our weekly market wrap up and crypto going into the weekend. But that's it for today, Crypto Trend Trader, and I'm out of here.